this is this is to help us to this is to help us to understand our risk to reward ratio. This is a trade I took last week, and as you can see, this red is showing areas of losses. Now, the break between this red and this green is the, what's it called now? The break between this red and this green is the entry point. This is where you can choose to enter the trade from here. Okay, you can choose to enter the trade. This is where I entered from, right? And you can also choose to enter the trade from here, right? So, and then probably because of this candlestick, this is called an order block, or this engulfing candlestick, you could have put your stop loss below here. That means that whenever the market comes below here, then that means that the market, and this value, can you see the value in black on this cursor that can you see the value in black? That is what will be the value of your stop loss. And what that means is that when the market comes backward, because now this is a buy market, obviously. You know, we took a buy we took a buy stuff, a buy order. So this buy order, this buy eventually went up in our direction. You understand? So that small side, that small side that we have is the part or area that you are willing to risk to make all this profit. And now if you look at this is 1 to 3 risk to reward ratio. This 3 is the reward ratio, 3.31. That means that, let's say you use a 1 standard lot size. Okay, let's assume that you use a standard lot size and you enter your trade from here. Now this is from here to this point, this is 45 pip. Wow, that's a lot of pip. This is 44 pip. Let's say that we use a mini lot size, which is 0.10. That means that for this trade to be invalid, if you enter the trade with 0.10 lot size, all you will be losing will be $44 because this is 44 pips. Remember, for a micro mini lot size 0.10, it is $1 per pip. You remember that, right?
Yes.
So when it goes against you in this direction, right, this is now that means you'll be losing $44 per pip. So whether you are there or you are not there, if you have entered the value of the stop loss here, you have entered the market. This is your entry value. It's going to show also on your chart, on your trade. And this is your entry value, and this is your stop. This is your take profit value. It's going to all show on your chart that these are the values that you are expecting, right? So whenever the value shows itself up, that is the value that you are going to be. This is the value that you are going to impute in your trade in the market in your trade. Now, what you are doing simply is that, let's say you have a $20 account and you just want to take this trade and use 0.10 loss size. That means that you are risking just $44. You're risking $44 to make. Now let's measure the profit here also too. From here. Now this is 145 pips. Okay, 145 pips. It's moved in our direction. Now 145 pips times $1. That is how much dollar? That's how many dollars now?
145.
Is that what?
145.
$45. So that means that you are risking $44 to make how much? To make $145. You understand? So if the trade eventually goes in your direction and it hits your, sometimes you don't have to wait for it to hit your take profit, because sometimes market might retrace back into, you know, where you don't want it to retrace into and all of that, and you start regretting all of that. You get. So, but sometimes if you have, so I'm going to say something to you later on. Now, so why we set stop loss? So that it doesn't keep coming against. Imagine that you set a stop loss here now, And then imagine you just set stop loss here now. A market continue coming down, 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 down. The more it comes against you, the more you are losing money in your account. And it can come so much that it wipes all the money in your account. So that's why we use stop loss to stop our loss for us. You understand? So, and then sometimes me, I don't use take profit because I close my trade based on when I feel like it's okay to close the trade. But there's a way, there are some parameters you can look into, you can look at to close your trading, to close your trade, whether the trade might reverse, because imagine that your trade is already moving in profit, going up like this, and suddenly it comes down and retraces again and comes back into loss. Okay. Now there is so this is why, so you can choose to trade you can choose to enter your trade, set your take profit, set your stop, but the stop loss is very, very important. You can take profit anytime. Now, one of the things that we do also in trading as a trader is that we set our take profit value. We break even. Now, you need to know this down. We break even. What does it mean to break even? You cannot break even when you are in loss. The moment you are in profit and you have moved at least 20 pips upward or 30 pips upward in profit, right? Now, let's say you have moved 40 some pips upward in profit, or you have just moved ahead very well. Now, break even means that you come to set your stop loss. This stop loss that was here before, that was below here, that was 154,492. You come and set it at your entry point. This is where you enter. So by that time, if you are in profit, you will be able to set your stop loss at your entry point. Okay, because the market has moved upward a bit, right? That move up upward, the market is no longer there. So this is your stop loss that was here. You can now come and set it at your entry point. Now, when you set it at your entry point, that trade has become risk-free. What that means is that even if it comes back and retrace, the moment it gets to your entry, it's going to close at break even at either 000 for you. You understand? It's no longer going to, you have to come and close your stop and stop you out in loss. You make to break even here, you can leave the trade and don't set take profit and just leave it to keep going, whether you want to keep going up or anything, how long you want to leave it for. Because even if it retrace back, it will not close in loss for you. It can just close in some a little, maybe minus 0 point something loss. If you can set it above a little bit, or just set it on the same value. The only difference will just be your broker commission that they are charging. So that's how to break. So the moment you break even, that trade has become risk-free. And another thing you can do is to trail your trades. So while the market is moving on, is moving in profit for you, the moment you get here now, you can set your stop loss here. And in the hope that it's not going to come back to that point. So while you set your stop loss here now, what that means is that if the market comes back against you, if it gets here, it's going to close the trade automatically, but it's going to close in profit because the market is moving in your direction. You are in profit. Do you get what I'm saying? Market is moving in your direction. Yeah. You are in profit. So it's going to definitely close in profit for you. So when it moves up again a little bit more, you can move up your stop loss again and move it upward there. Your stop loss value is this value on your right. Can you see 156.64? That's the value you keep imputing on your trading order to manage it. Okay. But look at how market came back to sink into this place. So if your stop loss was here, somewhere around there, market would have touched it and closed it and closed the market automatically because of what is happening at that time. Do you get what I'm saying? So that is what we do. We break even, we set stop loss also, and then we set take profit. All right. Now there's another type of so let's talk about types of orders that we have in the market. The types of orders that we have in the market. We have buy orders, we have sell orders, we have buy orders, we have sell orders, we have buy limits, and then we have sell limits. We have buy orders, sell orders. We have buy limits, sell limits, buy stop, and sell stop. Buy limit, sell limit, buy stop, and sell stop. Now I'm going to explain to you now. Now let's move this market let's move like this. All right. Now this is, let's say that this is presently where the market is. Now I have seen this area that this is a good area. This is a good area that the market might come and react to. right? You might have seen this area like, oh, this is a good area market might come and react to. And presently, the market is moving up. It's moving up, right? It keeps moving up. This area, I have seen as an area of interest. Market has reacted in that area twice, and that it's possible that the market reacts here again and reacts more. So what can I do, or what should I do, right? So what I'm thinking is that, so let's say that possibly that I'm expecting the market to come back to this area again. I'm expecting that this market come back to this area again. That in case it comes to that area, it is possible there is a high likely chances that the market buy again and keeps pushing up from this area. So what do? I sell a buy limit here. So what does that mean? Buy limit means is that maybe from this, because this is my zone, maybe from the entry point of this place, from this entry point, 153.592, I'll set a buy limit, right? I'll set a buy limit there. So that means that I am not buying at this time. I am not buying this market right now. Because this is presently where the market is. Market is up in 1.154436. So what I'm waiting for is that I want this market to come back down here. Whenever this market come back to 153.559, it should buy for me automatically, whether I'm out there or I'm not there. This is like you scheduling a call. I don't know if you know about Zoom schedule, where you can schedule a call on Zoom. Do you know about Zoom schedule, where you can schedule a call on Zoom? Let's say for 7 p.m. now, automatically when it is 7 p.m. the Zoom meeting starts. Have you experienced something like that before?
Yes.
That's what we call buy limit order too. So when you set it, you can also, the options gives you the price that the market should buy for you. So the market buys for you from here automatically at 153. At 153, the market buy from you at 153. So if only the market gets the comeback there, sometimes the market may not come there. It might come there and later move up. So those are the four. We have 4 types of order. We say buy limit, sell limit, buy stop, and sell stop. So this is a buy limit. So that means that when the market comes back to this zone, this is your area of interest. When the market comes back to this zone, the market automatically activates here, and then if the analysis is correct and it keeps buying, start going up in that direction, it's going to be in profit for you, right? And if not, if you have set a stop loss and it got there and it didn't start buying and it kept going against you, the moment you get to your stop loss, it's going to stop the loss for you and close that trade for you. So now let's see what the market later did in the future. The market later come there. Now, can you see? Market later came into that boss here, into this area of interest here. Came into it here. It was close to stopping our loss, to hitting stop loss. But market hit deep into this area, touched it, and went back up. Can you see? And start buying. So at this point, let's say that this was your buy limit order. While it's entered this zone, it is this limit place, this point, it kept on selling all this time, all this while it was going, it was in loss. So it's going to be in loss. But the moment it retraced back up and then it start buying, then it enter profit. So you could have set your take profit somewhere around there, around this top here. That's set your take profit somewhere around there. So you would have been in profit, right? You would have been in good profit, depending on your lot size. You'll have been in profit. So you can use this to set your buy limit. So let's this is a long, let's long it. So this is where we are entering from, right? We're entering from here. Our stop loss is going to be here, right? Then let's just come like this. As you can see, the market move in that direction, and then it take profit straight away. And what are we risking here? We are only risking a little peak here, small peak. This is a 1 to 3.65 risk to reward ratio. So that means that we are only risking. So you know that this business is a game of how much are you willing to risk to make how much. We risk 27 pips to make 27 pips. If you are using 0.10 pips, that is, you are risking $27. So sometimes as a trader, you must be prepared to know how much am I willing to risk, how much am I willing to lose on this trade. Losing is inevitable. You must just be prepared to know how much you are willing to lose on that trade. All right, it is very important for you to understand it, that, okay, this is what I want to lose. This is what I don't want to lose in the market. But losing is inevitable. But you must be certain, how much am I ready and how much am I willing to lose. Now this is 99 pips, right? So that means that I'm risking $27 to make $99 or say $100 in round figure. To say I'm risking $27 to make $100. Now that's almost times 4 of what I was planning to risk. Okay, so the business or the system of trading comes with we knowing how much am I willing to risk on this trade, so that you're not just going into the market as a trader trying to risk all that you have, trying to risk everything and trying to just go in and trade irresponsibly. This particular pair, JPY, is one of the pairs that I recommend traders to trade, and also Euro USD. Euro USD is the most traded pairs that we have. So what you should understand is how where to find perfect entries. Now, if I had seen this trade, I would have taken this trade because of this area, this particular engulfing. We've not entered into technical analysis yet. When we enter it, you understand why I would have taken that trade from that area. Because first, this is a support resistance zone that eventually became a support zone. So it's an area of importance. And then the market came back to react to that zone. And it kept on moving up. And from that point, it kept moving up. So if you have left your trade, you would have still been in more profit because the market kept moving up in your direction. Can you see? And it got up to where, so you would have even made more. If you have been able to leave it more, this could have taken you like almost a full day, 24 hours or more. Now, let's see how much profit it would have made us. But sometimes, most traders are not patient enough to leave their trade. And I mean, why do you want to leave your trade? Some people, depending on the kind of trader you are, if you're a scalper, now this 322 pips. If you're using 0.10 lot size, that is $320, $322. And you only reach $27. So why should I want to leave my trade for too long? When I can just take advantage of the buying and the selling and just go in and out. And some people are position traders, some people are swing traders. Swing traders might want to leave it. Intraday trader too might want to leave it, and they would have, probably what was that thing I told you the other time? Break even. Remember break even? You take away your stop loss value, remove your stop loss value, and put it somewhere, put it above or on the entry price. You enter your entry price as your stop loss value, so that even the market come against you, it will not close in loss. It is going to close in profit or break even. A little bit of profit if you move it up a bit, or just close in 0, 0, 0. You losing nothing. And remember that I talked about trailing your profit. As it's going up, you are trailing it. You are putting your stop loss above. As it's going up, you are putting your stop loss above. Going up, you are putting above, so that in case the market comes against you, it's going to close for you even a little bit profit there. And then that trade would have become a risk-free trade. You understand? Now, that being said, the same thing happens for sell trade. The same thing happened for a sell trade. Let me look for a sell trade, and let's also discuss that coming. So now let's say this is an area of interest. There's an engulfing, as an look like a doji here, and then I've seen this engulfing kind of, and then I see the way it reacted, and then I see how this one came up again. So I can say that okay, this market is presently buying, right? It's presently buying. We have not seen all of that. Okay, let's look for a better example, right? So this market is presently selling here. So we have seen this area. This is our area of interest, right? This is our area of interest. We have seen this area as our area of interest. Why? If we go on higher time frame, that would be an engulfing candle, because a bearish engulfing candle because of that one long candle and then so many red candles. Now we have seen our area of interest here, and we are like, okay, market is still selling here, still selling, but market will not just sell. Remember I told you that the big boss in the market, the banks, the institutional traders, they don't just move market at once. There's something we call retracement. Market retrace back sometimes to the origin of that impulsive movement to pick up more orders before it keeps going in the direction that it needs to go. Now, I'm not sure I've explained that to you. We'll do that in the advanced classes now. Now, as this market is moving now, that's been selling, and then everybody's happy. They keep thinking that it's selling. More people will be joining the sell. So suddenly the market goes back against them. And sometimes it might even come up here to clear liquidity. So clear this liquidity here, clear this liquidity here, and it keeps going up, and people keep thinking, oh, this is the next person is going to react to. This is the next person is going to react to. And meanwhile, it's coming for here. And then you can set, now can you see that? Can you see what I was saying here? It cleared this liquidity up here too. So if you have entered the sell limit here, you could have hit our stop loss, probably sold a bit, hit our stop loss and take us out. So maybe let's say for more area of interest. So let's say that we have another area of interest here. This was our area of interest. This zone, higher zone, was our area of interest. If you check higher time frame, it might have been an engulfing candle there, right? So now market has been selling. So what we need to do is to sell a limit, set a sell limit here that because we are looking for a sell, market is selling, but it's selling at the moment, but we are waiting for it to retrace back so that we can get another good entry. So now when market came back into this zone, it could have taken us out by a pip or so. That is why when setting your stop loss, you leave out a benefit of 2 pips, 1 or 2 pips, so that you don't get stopped out by unnecessary stop. So when market gets back into this zone, it should automatically start selling for you. Your stop loss can be above here, because whenever it breaks out of this zone, it has rendered your setup invalid, and then you can leave that trade and go on for other trades and other entries. So the minute it gets to this place, it was still selling in loss. Then it started, it was still buying about it at stop loss, and then started selling again. And see how it sold. So if you had entered this trade from here like this, and then set our stop loss, excuse me, somewhere around there, right? Somewhere around, and then we entered here, now, and then we were able to leave it to come this far, to drop this far, would have made so much, right? Because we left it that long. Now, what do we risk? How many pips did we risk? Depending on your lot size, remember that if you use a macro lot size, we risk 40 pips. Well, that's a lot of pips. Depending on your capital, and this is 40 pips, I'm risking 40 pips. That's $40. If you're using 0.10 lot size, you're using 40 pips to make how much? If you are going to be leaving it also to calm this down. Not everybody is patient enough to see their trade play out like this. And I don't blame them. To make 344 pips. Now, this is like 1 to 4, 5, 6 risk to reward ratio. The patient always pays sometimes, and sometimes, waiting. That is why when your trade is in profit above more than 20, 30 pips, you break even. You break even here. You bring your stop loss back up to your entry point, so that even if it retraces against you, it doesn't close against you in loss. You are breaking even. You're either not making anything and you're not losing anything, right? And also, there's something we call taking partials. Okay, taking partials. How do you take partials when you take a trade? How do you take partials when you take a trade? You take partials when you take a trade by so let's say that you use 0.10 lot size. Let's say that you use 0.10 lot size for this trade. Why this trade was in profit for you, right? You can only take partials while it's in profit. I think I include partial loss too, but I've not tried it. I've never had a reason to try it. You can also so when the trade is a profit for you, and it's coming down profit. Yeah, you sold that. You click on sell and it's selling for you. You can choose to close part of the profit, right, and let the rest run. And how do you do it? You click on the running trade, you click on the pencil button, the pencil to edit it, and then there's a pen sign there. You click on it to edit. The mark one is to close everything totally, but you click on the editing, and then you go to your lot size to edit your lot size. So what you do is that you edit out the lot size you want to close. So let's assume that we are using 0.10 lot size, and then we are in profit. We are profit on 100 pips already. That is $100 already, and you want to close half of that trade in profit already. Maybe you have secured it, you have even broken even, and then you want to close half of that trade. All you need to do is in your lot size area, you'll be able to edit your lot size. Now, I think, do you have a MetaTrader for your phone, Mordecai?
Yes.
So we'll have to try. The market is not on right now. I've said I should show you, but that's why I said we need to have a class during the week so that we can practicalize this stuff. Okay. Now, what we are doing what we are going to do is that, so what you are going to do is that you close out half of that amount. Maybe I'll do a screen record later in the week and send it to you so I can watch.
Okay.
So you are going to close out half of that amount. That means that half of 0.10 is going to be what?
Pardon? Sorry.
You said what?
I didn't hear what you said.
I said half of 1.0 lot size is going to be what?
0.5.
0.
5.
No, 0.05. You get it?
You said
Half,
1.0.
No. I said half of 0.10. You get? Because we are working with 0.10. So half of 0.10 is going to be 0.05. You get it now?
Yes.
So what we are going to do is that the moment you click on 0.05 and then you click on close profit below, it's going to close half of that trade. It's going to close the trade $50 for you, and then the remaining 0.05 is going to keep running. Whether it's running in profit or it's tracing back, reducing the profit, is going to keep running. You understand? And then so sometimes as a trader, learn to always pay yourself. When you open multiple position, close sums. If you open one position, break even, and then take partials, close most of the trading profit. Like if it was 1.0 lot size, you can close 0.70. That's 70 pips, $7 per pips that you have closed already, depending on how far it has gone, and let the rest run, break even, let it run risk-free, break even, however it wants to go, set your CP and leave it. But when you're in profit, never let the profit go. You know, it's hard to see profit in, sometimes profit is not easy to come back at times. When you see profits, no matter how sure, you can't be so sure. No, we are just speculators in this market. Learn to always take profit. There will always be 1 million and one other opportunities to enter the market again. So learn to always take your profit. Learn to always close your trades in profit. I know that it's good that you said that you want to do this, you want to do this and that, you want to leave it. No. Try and always close profit. Take profit. Pay the trader. It's one thing that you need to learn as a trader. Learn to always pay yourself. You have to always learn to pay yourself. As a trader, you pay yourself. Pay yourself. It's good. It pays to pay yourself. It's always good to pay yourself. So learn to always do what? Pay yourself. It pays, so that you are not on the long run. You don't end up being unprofitable. So pay yourself. Take profit. So you need to understand that taking profit is very, very important, right? So that is that about that. So let's move and talk about buy stop and buy limit and sell stop. Now, what does buy stop means? Let's start from sell stop. Now, say this is where you are entering your trade from this area again. You are seeing this area again. Market is keep selling, and you look and you see that, okay, the way this market is selling, whatever makes it sell below this level, whatever makes this market sell below this level, this area, that means that it's going to keep selling. Whatever makes the market sell below this area, that means it's going to keep selling. So you can sell to your sell. I don't usually use this sell stop or buy stop. I use limits, buy limits most of the time, and but I enter my trade manually most of the time. So that's why I'm glued to my phone. So I'm always watching it. You can set alerts, that reminds you and all those stuff. So whenever market gets to this point, market starts selling and keeps selling to this point. It's sold to this point. Remember that we are doing sell stop and buy stop. This time around, it was supposed to get here now. For buy limit, it was supposed to get here and start buying. But for buy stop or sell stop, this market is presently selling, and it breaks below this zone. Then you feel like it's going. The moment it breaks below this zone, you feel like it's going to keep selling. So you set your sell stop somewhere below here. That if market sell to this point, let it activate a continuation of a sell for me. So I look at what market did. When market got to this point, it kept on selling. So you're going to be in profit because it kept on selling, right? Market kept on selling. So that means that is sell stop. That okay, as market is selling, don't stop. Let it automatically start selling for me also. Likewise for the buy. Likewise for the buy, right? This is the market. Market started buying from this area. Started buying. You seen this area from started buying. It bought into this area. Started buying from here. And looking at market is buying. It keeps buying. Whatever makes it buy out of this zone, let it continue buying. So that's your buy stock. That if it buys out of this area, let it continue buying for me. Okay, let it continue buying. So buy stop means that it should keep buying. So if it is buy limit, it means that if it retraces back, say it retraces back into this box, like the way it came here, it sold down to this box, let it now buy for me. But buy stop means that it's presently buying, let it continue buying, let it continue buying. If it can buy above this level, let it continue buying. But if it is for buy limits, that means that it was buying before, now it traced, and you're hoping that it trace back into your lower place so that you can buy it at a cheaper price. Remember that we buy low and then we sell high. You understand? So that is definitely basically like the definition of buy limits, sell limits, buy stop, and sell stop. Okay. So,
Yes.
Mordecai, I hope you understand all of this. What I just explained to you. Mordecai, do you understand them?
Yeah.
I know I've always promised you to send a recording, but today I will send a recording of this one today because you need to understand them while we go into the technical part of this business, of this trading. And this is the outlook. We are having a big outlook for this trade. I'm expecting a sell this coming week. Looking at the weekly time frame, what am I expecting? I am expecting a sell because the market is presently at an overbought position. It has buy and buy and buy and buy. We're supposed to react here, yeah. But well, yeah, I'm expecting a sell. Let's see the daily time frame. This coming week, actually, I'm expecting a sell. And whatever makes it break out of all these zones here, then that means we are upward for the buy. So we keep looking out for the buy. This is the monthly time frame. Well, so there's still more space for buy. And then it reacted to this place here, then sold a bit. Now there is a major zone here and I'll be waiting for the markets to actually sell into. This is a very important zone that anytime the market gets into the zone, I'll be expecting that the market sell seriously into the zone. So I'm expecting the market sell seriously into the zone. This is for big people. These are people that trade long for months, that option traders, because this is going to be a lot of stop loss. This is 1,000 plus stop loss. So this is why we go on our smaller time frame to look for better entry, because you cannot set this type of stop loss. It's going to be too large for you. And meanwhile, the profit potential too is high, because when it drops, it can drop from here, to this point. And that is also 1,000 and 1,600 pips. Yeah. And it can even drop lower. All right. So, but we come to smaller time frame to look for precise entry. But this is a major zone for, and whatever makes it break this zone, that means that the buy is going to continue. It's going to continue up to this point. That means that we are up for a buy movement. But at this moment, it's still buying right now, Sha. A new week is about to start, and with the weekly time frame, the market is bullish. The daily time frame is bullish. Monthly time frame is bullish. Then let's see what the market is going to do next week. So forward time frame, you can just come to forward time frame now to look for a more, easier, a better entry. Just come and look for a better entry somewhere around there. Coming. Someone for a better entry somewhere around there. And then, so these are a few entries that we can pay attention to. Sorry, Mordecai, this might sound strange to you because we've not done all of this. I'm just trying to show you some stuff. These are important areas that we might pay attention to and the market might react to for a sell. And I'll be expecting the sell this week. I was expecting the sales to happen, and then we see how far we can go. And then it might sell back to this point before it continues a buy movement. So there's a lot of potentials here. I might sit out Monday trading to see how this plays out. Set my limit somewhere around here. Can you see that it was closer? Actually, it activated this limit. If I set the limit here now, it activated this limit a bit. Can you see? Touched it before it started coming down. So sometimes you had a pip or two more to your limit so that you don't miss limit. Especially because if you're not using a raw spread because of broker, can you see that activated it and started selling already from here? So it's possible that we see more sales when the market opens tonight, and then things happens. Okay. Do you have any question, Mordecai?
No.
I don't know why you don't have questions. Are you sure you understand all the stuff we're talking about? I've explained.
Yes.
Mordecai, are you sure?
Yes.
Are you sure?
Yes.
Are you sure? I'm going to give you a test very soon now. You practice.
If I don't understand it, I can go back over the video.
You said what?
If I don't understand, I can go back. If I forget something, I can go back over the video.
All right, then I'll make sure that I send the video to you. I would upload it now via my stuff and then make sure that I send it across to you today. I will make sure that I send it across to you today. Okay.
Yeah.
All right, then. This is where we draw the curtain. This is where we draw the curtain. Have a wonderful week ahead of and practice. Remember, trading is more of practice than just bring the chart. Trading is more of practice. So you have to practice and practice until you get so familiar with charts. Okay, until you get so familiar with charts. All right. Do you get?
Yes.
All right. Have a lovely evening.
You too.
Have a wonderful time. Thank you so much for your time.